Let's get into the markets today. It is going to be a rocky December going into January. Do we get a complete turnaround? We'll dive in deep. I want to start with, of course, our sponsor, and that is BTCC. This is where you guys can trade the volatility. Jump over on our link and get, of course, a bit of a bonus by getting your first time deposit in there of 10%. And of course, there's a lot of other benefits over there, including extra bonuses of up to $10,000 per user and other things that you can get, of course, around their VIP program. So use our link. It's going to help you guys get started, where you can go out there and trade this volatility that we're seeing in the market overall. And let's start real quick with this X post right here, which is a big one, and that is the U.S. economy added 64,000 jobs in November. This was above the expectations. However, the unemployment rose from 0.2 to 4.6, and the expectations were holding at 4.5. So job scenario is still softening. Something that we've talked about for a while on this channel is that this issue is not going to ease up. I feel that this is still going to put some pressure into early next year, and it's going to continue to put a lot of pressure on the Fed going forward. Heather Long was right here talking about this. U.S. economy is in a hiring recession. I would agree with that. Almost no jobs have been added since April. Wage gains are slowing. 710,000 more people are unemployed now versus back in November of 24. These are not good signs. And are we nearing a potential recession? If we are, then we're going to continue to see pressure on major crypto assets going into the markets for sure. And of course, within that, you've got issues where the market itself is very choppy going into Christmas. Take a look at this clip.
It's been very disappointing price action, and I think this kind of choppy price action with a negative bent is going to be the dynamic for the festive period. I don't think it's so much about the jobs data. I think the jobs data today is a great one for short-term traders, but it's one we'll quickly move on from. The dynamic here is that on one hand, Powell has emphasized that he thinks that the prior jobs data has overstated the health of the jobs market, therefore increasing the scrutiny and in the importance of these numbers given the data vacuum before. On the flip side, he also warned that this one's vulnerable to some kind of technical distortions, which means people will get very excited in the short term, and then a week later, if it doesn't suit their view, they'll move on from it. The price action is very negative out there, and I think that's going to remain the case until we see the full pain play through on the digital asset treasury companies, which are really at the lows. And that's what's really weighing on the crypto sector, and in turn that's weighing on the retail sentiment, which is then hurting the big AI names or the more meme-focused AI names as well.
The market is clearly in disarray here as we see going into the end of year. All headlines that were pointing to a year-end rally are completely off the table now, including what would be stimulated from what we could see out of the Clarity Act. And we'll get into that in a second of why that could be a big catalyst for next year. But earnings concentration right now has reached historic extremes. And what this includes is the earnings of the top 7 stocks now reflecting near 26% of the S&P's total earnings. 7 stocks. I want to say that again, 7 stocks reflecting 26% of the entire S&P 500 total earnings. That's a big deal, guys, in terms of coalitions around what we're seeing in not only the tech side of it, but also just the way that investors are playing the market. They are not betting on any of the mid caps. They're not betting on anything else. It's kind of what we've been seeing with, of course, the altcoins here recently. Now, I want to get into a series of clips on an interview that Tom Lee did with Prof. Galloway. And he talks about the first thing, which is the comparison between 2025, what we've been living, and 2026 and how that plays in the crypto market. Take a look.
It feels as if the market has become so concentrated or dependent or circling around a small number of stocks that to be bullish on 26 sort of mandates that you're, well, tell me if you think this is true, indicates that you're bullish on the Magnificent 10 and AI stocks. Is that necessarily true?
I mean, I think 2026 is going to look a lot like this year, meaning we are probably going to have many months where the market is actually down year to date. You know, I mean, this year we were down double digits at one point before the market recovered. I think that plays out next year. But for the reason that I previously stated, I think that we end up a bullish outcome despite all the skepticism. And it does require large cap tech and AI stocks to still produce earnings growth can actually perform well, because if the Fed is cutting and interest rates are coming down and the business cycle is sort of really starting, that's good for other stocks.
A couple of things to consider here, and I'm not necessarily in agreement with Tom on this one in the sense that it's good for other stocks that could kind of be like tag-alongs based on the fact that we're seeing economic pressure coming in from the Fed, meaning rate cuts. And we'll talk about that in a second. How many rate cuts will we get in 2026? But I think the real concern here, which is the canary in the coal mine, it is the issue around labor and jobs. And if we continue to see the pressure coming in from the market, there's going to be a subsequent pressure on many of what we'll see in jobs just because of, or in the market in general, just because of the pressure of how investors are looking at the macro environment. Because once jobs start getting soft, they understand there's a huge effect on retail stocks, what we'll see in terms of GDP growth, all those kind of things get hit in a big way. Now, he goes on in this interview and he talks about a mini bear market. Listen in.
I think it's so interesting what you say there about, we're looking at the same things and we're drawing slightly different conclusions about what that means for markets.
It would be kind of shocking if you didn't have some kind of profit-taking correction in 2026 at some point on the order of 10 to 15%. It would be, I'd be really surprised not to see that.
Our outlook actually does call for a drawdown next year. So very similar to this year, of probably closer to 20%. So I think we are going to have another miniature bear market next year, but then we're going to recover.
Now, Lee goes on and talks about how this 4-year cycle and what Bitcoin's role in crypto will be and whether or not it's going to get hit. Take a look.
Crypto's had a rough year. It was actually having a great year until October 10th. Then any event in history, the most recent one before this would have been 2022 with FTX. And that wipeout pales in comparison to what happened on October 10th. But in 2022, it took 8 weeks before crypto, the smoke cleared, the leverage wipeout was enough in the mirror that crypto prices began to recover. This week is the 8th week since that crisis. And I think crypto prices are beginning to actually recover. That's why I think Bitcoin can double from here by the end of January. And that's going to be the big question. If Bitcoin breaks 125 in January, there is no 4-year cycle.
I don't think that is going to happen. And there's a couple of indicators that are in the charts just in terms of, just if you look at the MACD, which is really where we see liquidity flowing into the market. The last time that we started to see those highs was back in October of 2021. And then, of course, we saw the MACD started to flow out. And the market, of course, went into the beginning of what was a fairly consistent bear market, where we saw the bottom coming in. And then, of course, right around there, which was September of 2023, that was when we started to see a little bit of life coming back into the market. This is looking at Bitcoin. This is where we are right now. MACD, of course, we've seen this all-time high clipping up there. But right now, we are starting to see liquidity flow out. Again, very similar to back here of when the MACD, what we saw in terms of liquidity flowing out of the market. And this is the first time that we've really seen this. And this is on the monthly chart. So I think Tom Lee may be wrong here. Now, could I be wrong? I don't know. We'll see at the end of January. If we have a $126,000 Bitcoin, Tom Lee, I think, will go down as one of the best analysts maybe ever going forward. Okay, so there could be some things that maybe support Lee's analysis. And one of those would be crypto regulation, especially around the market structure, okay? So we're missing these deadlines left and right. This was supposed to be done all the way up to Thanksgiving. That, of course, was bypassed and missed. We saw a government shutdown that started to affect into it. But for the industry, the latest delay now on market structure legislation says it's more about Washington's priorities. And I think that is the case. Remember that if this goes live in January, it would take a Herculean effort to get it done, number one, because I think there's a lot of things they just don't agree on. And the other thing that it has to do is it has to bypass, one, a potential shutdown and a defense spending. All those kind of things are happening in D.C. right now. So I just don't know if the Senate, and remember, the Senate is the markup phase. Remember, the House passed this bill, all, fun and dandy. Hey, look what we did for crypto. The Senate gets over there and says, nah, hold my beer. We're going to restructure how this thing looks in all these different ways. It's going to go back to the House for approval. The House is either going to be spineless and approve it the way that the Senate has done it, which is being influenced by so many different places, or they're going to turn it down. And if they turn it down, then we continue to see pressure on the market in general. And the election cycle, of course, starts to draw near, and we're talking about midterms. Midterms start to get talked about in March and April. One other thing to look at is the government shutdown, as I kind of mentioned there in January. This, of course, is the poly market on it. Starting to move up. Let me kind of zoom in on that for you guys. What it was at its highest was back here in the middle of December 11th. It was at 38%, which it had been climbing dramatically. So right now it dropped off significantly, and now here recently we've had another spike. So this is what DC is dealing with. This is the concern I have with January being the win area for the Clarity Act. I think it moves further into the first quarter. Treasury Secretary Bessent, though, says maybe let's do this. Let's grab a little STEMI model here and let's drop in 1,000 to 2,000 in tax refunds to Americans. That could, of course, move the needle in terms of retail. But the real question is, does it move the needle on some of these liquidity potholes that we have right now in the crypto market? I think that's the big question overall. I want to go to another clip because this is Fox talking about trying to sell tax relief to viewers. Take a look.
The president insists that his tariff windfall is big enough to fund the government, cut the deficit, and still put money back in the pockets of voters. Tariff dividend checks as well. Critics will argue, it's not just critics, we don't need to put it in the frame of critics. I'll argue that the math doesn't add up. File, and then you get a refund, and there's something that he is piecing together here, and it's not quite coming out. But well, I sense something.
I sense things too.
Let it rip, and that's exactly what this administration is going to do with the dream team of Hassett and Bessent.
That's your prediction. I think you're going to really see something amazing, and the haters are going to have to turn around and admit that they were wrong on this.
Why did we need to create what will turn out to be another entitlement?
It will view it where people will become capitalist and they will see that their investment within the stock market will grow. It will be transformational.
Well, it's good to know that we still have bozos on Fox. What are they talking about in that clip? I have no idea. These people are reaching for straws, I guess, as it gets a little bit late in the year. Now, Bessent goes on and talks about this as well, but I'm kind of curious. Do you guys think if you got an extra 1,000 and 2,000, I mean, you guys may do it, but for the average American, would they put it into crypto or would they buy gold or a stock, or what do you think they would do with it? Drop some comments down below. Let me play this clip while you're doing that.
Welcome back. The Trump administration hoping to give working Americans a boost in the new year with a new tax refund of up to $2,000 by early next year. The payout coming from recent tax changes and tariff revenues, with as much as $100 to $150 billion flowing back to taxpayers in the first quarter of 2026. The White House says it expects this to be the largest refund season on record. I am with the Treasury Secretary this morning, who is also the IRS commissioner, who is also the guy who's holding it all together. Secretary, what can you tell us? You see all the data. What can you tell us about the upcoming tax season and what we're going to see in terms of our returns?
Yeah, so Maria, let's go back. The one big beautiful bill was passed on July 4th, but for working Americans, it was retroactive to the beginning of the year. Most taxpayers did not change their withholding, so as a result, we're going to see very substantial 100 to 150 billion of refunds in the first quarter go directly to Americans' pockets. So the sooner they file, the sooner they'll get them.
If you're looking ahead to the new year and the new 5-10 years of this revolution of AI, what job would you go into? Would you choose a different sector?
I'm not afraid of AI. I had the CEO of one of the largest credit card companies in, and I said, tell me, seriously, do you think AI is going to hurt your hiring? And he goes, no, we're just going to hire in different areas.
I don't believe that. I'm not necessarily believing that. I think we're going to see a lower productivity play out within all organizations out there. They're just going to hire less because they're going to do more with less. And that is not going to be good, I think, in general for productivity and the economy. Now, it may be good for certain areas of investing. Here's Abramo talking about this. Lisa Abramowitz talking about that. Cash allocations have fallen to record low levels in banks. And this is coming from a lot of fund managers. So basically, it's investors saying we don't really expect an economic downturn in 2026, but everybody's calling for maybe an oversell. This gets really dicey because the market, S&P is all-time high. Gold is cracking like crazy. Liquidity is flowing into these markets. And yet we've got a huge pressure cooker on crypto in general. I don't know. This is, crypto always leads the way on many of these indicators going forward. I just don't know if this is the time of how this plays out in 2026. Tom Lee says that the AI industry is already disrupting, and here's why.
When people talk about the types of jobs that AI will, quite frankly, destroy, I think they're describing the analysts at Fundstrat.
I don't think there's been a year in my career on Wall Street that money wasn't being spent to actually reduce the labor intensity of the job. I mean, I remembered when I was at JP Morgan, in the 90s and the early 2000s, trading occupied a huge percentage of the cash equities business real estate. It was a couple floors. And then one day went to electronic systems and the number of traders went to a tenth of a floor.
Yeah, that's scale, and I would agree. I think technology has always displaced and created new, more efficiencies, a lot more productivity. AI, though, is a little different kind of technology because it is not a technology that starts to decrease in value as it gets implemented in systems, because that's what we've seen. It's kind of the race to zero. I don't know. I think AI is going to continue to accelerate on how it's leveraging productivity into systems, including businesses, and analysis going forward. So this will be a big deal going forward. I don't know that we have a full grasp of what impact we are truly going to see. NVIDIA, I think, is still in a good play in general. Now, the question is it overvalued? That's the real question. Many people would say, all right, you could go back and look at NVIDIA, place it in the dot-bomb era of prior to, or if we getting ready to go into the dot-bomb era, and NVIDIA is one of those blue sky stocks that will make it through, but it's going to take a heavy hit. Here's what Lee had to say about that.
When I think about the idea that many of these companies and the expectations that have been pinned to the AI cycle, the fact that that could affect some of the largest, most valuable companies in the world, where we're seeing the highest concentrations in those small companies, the higher concentration than we've ever seen in history, to me, that makes it scarier, what you just said. So I guess my question is, do those companies, do the big tech companies, the Magnificent Seven, do they count in your analysis of AI valuations being too high and the possibility that perhaps we might lose out or that the value won't actually show up for many of these companies?
Tech companies are becoming a bigger part of our life. So naturally, they're going to have a larger share of spending.
Yeah.
Now, if I substituted the word and called this, instead of the word banks, tech companies, I call them financial institutions, we would not be saying there's a financial institution bubble.
When you look at the sector of growth, and he is right, that what we're dealing with is a concentration, but I think there's going to be some winners and some losers in here. We may end up getting some major losses in one of those or two of those seven. I don't know. It's very, very early in this phase, and it's the same kind of musical chairs that happened in previous cycles that were not necessarily concentrated, but were definitely focused on a sector. But the analyst was right, and that is that it is centering on not only a sector, but only a few companies within the sector. So traditional Wall Street has to win over the next generation, because the older generation, the boomers, even certain generations like in mine, Gen X, unless they're really forward thinking, they're not thinking this way. They're still thinking past 30 years of investing strategies, not looking at the next 30 years of investing strategy. And I think that's the difference right now. I don't know if traditional Wall Street can win over the next generation. So they may be doing this, but I don't know if it's too late for this right now. There's just too many good products coming to market for sure. All right, speaking of what could win, what could lose, let's go over to this clip, because this is where Lee talks about altcoins. Take a look.
this is the nature of like of a exponential sector, right? If we look at an industry that could grow parabolically for 10 years, all of the future value is in the latter half of those years, right? I'd say it's probably safe to say only 10% are going to be good investments. Maybe it's even generous, maybe 5%. And of course, there's going to be a new emergence set of new players. And in fact, the economic model might change. But it doesn't mean it's a bad investment. And we've highlighted this as generational trades in past reports. For instance, like if you look at the internet, if you bought the internet basket in 99, okay? So you bought it near the peak and you held it to today, you actually still outperformed the S&P 500, even though 99% of the stocks went to zero.
All right. I mean, what he's getting at there is there's going to be just some exponential growth innovators in this sector around altcoins and some of these new emerging techs in blockchain. And we all know that. I mean, we already have been trading in this space for quite some time in the sense of meme coins. You're going to have a handful that win, something like a Doge, which is sitting there in the top 10, and others, I think. And there's going to be a few that fall out, obviously, with what's going on with a lot of the regulatory alignment. There could be a big ramp up here. Even if a lot of these do go to zero, you're going to end up winning on some other ones, whether it's a poly token or we get others that start to go out with a base token. There's many that will hit this market and may end up being here at the right time. So you have to be ready to play the market that way. Here's the Fed now cutting rates 6 times for a total of 175 basis points of easing since the first move back in September of 2024. 6 cuts, 2024, a little over a year ago, 6 cuts in. But over that time, other rates have barely moved. The market now prices a higher rate in Q4 of 2026 than it did prior to the first rate cut. So this is interesting with the potential for seeing how the long-term yields play out around these Fed rate cuts. And I just don't know how this could play out with 2026. Right now, Polymarket has it setting. The leader right now is, of course, getting 3 rate cuts in 2026, and that's clipping up a little bit. Let me kind of zoom in on that for you guys so you can kind of see this a little bit better. But right there it is, 24% on 3 quarter basis points cuts in 2026. That would be the assumption, even though there were times when we were looking at more than that for 2025. So maybe all that will change soon. Here, of course, gets into who is going to be the Fed chair. And we are all over the board on this. You've got some mismatches. You've got this little movement here recently with, of course, right now with Kevin Walsh, who is holding. You've got Kevin Hassett starting to split in there. And this is the situation. Hassett's still taking another reverse. And here recently, one of the guys was telling me that we were analyzing some video from Hassett on a recent interview, and he had a lot more neutral positioning statements that made him kind of talk more Fed-like. So maybe he's got the word from Trump that he is going to be the fair. I don't know. We'll play it out. But be on the lookout, guys. We're going to see a lot. All right, if you guys are not part of our own private member group, you should be. It's very easy to join. Click the link down below. You guys get additional research, insights, and a whole bunch more. Very easy to do. And of course, follow me on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.